There is a law on the books right now, signed in 1996. That makes it illegal for a credit repair company to charge you before they do anything. That is federal law, 30 years old, still active. And the credit repair industry just crossed $6.8 billion in annual revenue. A $6.8 billion industry built on top of a law. That says most of what they charge you for is illegal. If that sounds like it should not be possible, stay with me, because it gets worse. Here is the pitch, you have seen it. Maybe at 2 in the morning, thumb still moving, half asleep, and a Facebook ad slides in between a recipe video and a photo of someone's kid. 90 days, credit score from 620 to 750, guaranteed. The before and after screenshots. The testimonial from a person in Houston who says their life changed. The big green button that says start now. And the pitch works, not because people are gullible, because the timing is perfect. Think about who clicks that button. A 36-year-old dental hygienist in Charlotte, divorced 8 months ago. Joint accounts closed. An authorized user card they did not know about went delinquent. Because their ex stopped paying. Their score dropped from 712 to 620 in 11 weeks. They are not financially illiterate. They are financially ambushed. And the ad says 90 days. They sign up, pay a $149 setup fee, then $79 a month. Sign the contract on their phone at midnight, without reading page 3. The press release calls this progress. Now here is what the company actually does. They log into a portal. They pull the credit reports from the 3 bureaus, which anyone can do for free at annualcreditreport.com. Then they draft a dispute letter, not a custom letter, a template. The same template the Consumer Financial Protection Bureau publishes on its website, for free in a downloadable PDF. They fill in the blanks with the name and the account numbers. They mail it. They wait 30 days. Because that is how long the bureaus have to investigate under the Fair Credit Reporting Act. Then they send an email that says they are working on it. That is the service. A letter you could write yourself in 20 minutes. Using a template the federal government already gave you for free. Sent to an address you can find on the back of any credit card statement. $79 a month to rent a stamp. And I want to be clear. I am working with publicly available numbers here. Not telling anyone what to do with their own money. But look at what these numbers actually say. Over 6 months, the dental hygienist in Charlotte pays $623. The dispute timeline with the credit bureau is 30 days. Whether they file it or a company files it, the outcome is the same. The only difference is who clicks send. The industry knows this. That is why the contracts are designed the way they are. Remember that 1996 law. The Credit Repair Organizations Act says a credit repair company cannot charge you until the work is done, straightforward. But the telemarketing sales rule goes even further. For companies that sell over the phone or online, it says they cannot collect a fee until 6 months after they deliver documented results. 6 months of free work before a single dollar changes hands. No company wants to operate like that, so they restructured. Instead of charging for credit repair, they charge a monthly subscription fee for access to a credit monitoring dashboard, educational materials, and ongoing account management. The dispute letters are technically a bonus feature included in the subscription. The law says you cannot charge for credit repair before results. The industry says we are not charging for credit repair. We are charging for education. The letters are free. You are paying for the dashboard. That is not a service. That is a toll booth with a different sign. The Federal Trade Commission and the Consumer Financial Protection Bureau have not been fooled by this. In December 2024, the CFPB distributed $1.8 billion to 4.3 million consumers who were charged illegal advance fees by Lexington Law and CreditRepair.com. $1.8 billion. The largest distribution from the CFPB Victims Relief Fund in the agency's history. The court found these companies violated the telemarketing sales rule by collecting fees before delivering documented results. After the ruling, the companies filed for Chapter 11 bankruptcy and shut down 80% of their operations. $1.8 billion. That is not a rounding error, that is an industry. And that was just one case. In March of this year, the FTC sent $10.9 million to 443,000 consumers harmed by a company called Financial Education Services. The FTC's original complaint alleged the company took more than $213 million from consumers by promising easy credit fixes and then recruiting them into a pyramid scheme to sell the same service to others. 213 million. From a company that was sending the same template letters you can download for free. Now here is the turn. And this is where I need you to pay attention. Because what comes next is the part that should change. How you think about this entire system. Everything I just told you is true. The credit repair industry charges you for something you can do yourself. The fees are often structured to dodge federal law. The enforcement record proves it. But the system you are supposed to trust instead, the free dispute process. The one the government tells you to use, that system is also failing. A Federal Trade Commission study found that 1 in 5 Americans has an error on at least one of their credit reports. 5% had errors serious enough to result in less favorable loan terms. That is, roughly 13 million people paying more for mortgages, car loans, and insurance because of mistakes they did not make. And when those people file a dispute, here's what happens. The credit bureau assigns it to an investigator. Except investigator is a generous word. A House subcommittee found that TransUnion had 171 workers, handling disputes covering 38 million line items in 2021. 171 people, 38 million items. That is not an investigation. That is a conveyor belt. And it is getting worse. A ProPublica investigation published in March found that TransUnion and Experian have sharply reduced the share of consumer complaints they resolve in customers' favor. TransUnion's relief rate began falling in the summer of 2025, and by October was providing relief roughly half as often as before. Experian's drop was worse. The company resolved nearly 20% of complaints in consumers' favor in 2024. By last year, that figure fell to less than 1%, 20% to less than 1%, and the timing lines up with the dismantling of the Consumer Financial Protection Bureau. Since January 2025, more than 2.7 million credit reporting complaints submitted to the CFPB have gone without relief. 2.7 million. So the credit repair company charges you for a free letter, and the free system increasingly does not work. The person paying $79 a month is getting scammed. The person filing the dispute for free is getting ignored. The credit bureaus collect and sell your data whether you like it or not. And when the data is wrong, the burden of proof falls on you. You paid for the credit repair company because you did not know the letter was free. You trusted the dispute process because you were told it was your right. And the system that profits from your data is the same system that will not fix it when the data is wrong. The dental hygienist in Charlotte is still out $623. Their dispute is still pending. The ad is still running. That is not a broken system. That is a system where every player has a revenue model, and the consumer is not one of the players. And it all happens against a backdrop of $1.28 trillion in credit card debt. Per the New York Fed's Q4 2025 household debt report, the pressure is real, the desperation is real. The solutions are designed to extract from you while you are in it. Nobody talks about this at the office. Nobody mentions the $79 charge showing up on their bank statement every month. Nobody says out loud that they are paying a company to do something the government told them they could do for free, and that the free version is also barely functioning. That is the quiet part. Everyone adjusts alone. Now, I am not telling you to do any of this. But here are the levers that exist in the system right now. You can pull your own credit reports for free every week at annualcreditreport.com. Not once a year, every week. That changed during the pandemic, and the 3 bureaus made it permanent. You can download the CFPB's sample dispute letter from their website. You fill in the account you are disputing, the reason, and attach your documentation. You mail it certified. The bureau has 30 days to investigate. If the item is inaccurate, they must remove it. That is federal law under the Fair Credit Reporting Act. Same law the credit repair company is using. Same letter, same timeline. If the bureau does not respond in 30 days, or does not fix the error, you can file a complaint with the CFPB at consumerfinance.gov. You can also file a complaint with the FTC. And if the error is costing you money through denied credit or higher interest rates, you may have standing to sue under the FCR. An attorney who handles these cases typically works on contingency, meaning you pay nothing up front and only pay if you win. The 20-minute version of this is pull your reports, identify errors, write the letter, mail it certified, wait 30 days, escalate if needed. That is the entire service you are paying $79 a month for. The stamp costs less than $1. One more thing, the credit repair company's success rate numbers. The ones they put on their website, the 86% success rate. The average improvement of 40 points. Those numbers count every item removed from a credit report as a success. That includes items that would have fallen off on their own because they are past the 7-year reporting window under the FCRA. That includes temporary removals during the dispute investigation period that get added back 30 days later. That includes items that were genuinely inaccurate and would have been removed whether you filed the dispute or a company filed it for you. The success rate is not wrong. It is just measuring something that does not mean what you think it means. $6.8 billion a year. Built on a template letter, a 30-day clock, and the bet that you will not read page 3 of your own credit report. You are not behind because you fell for a scam. You are behind because the system has a $6.8 billion incentive to make sure you never find out the letter was free, and the agency that was supposed to tell you is being taken apart.